Hey guys, Mike here. So another interesting day in the market. And what I mean by that is you had some stocks up between 15 and 25%, beating earnings, some other things going on. We're going to go into that. But, this regional bank thing just won't quit, right? And I'm going to talk to you about that and what's really happening behind closed doors and what I really believe is going on behind the curtains for sure. And then we're going to talk about the bond market and what they're pricing in right now today. And I don't think you'll believe it when I show it to you. And then we'll go into the charts because some of those are going to be really important because some key levels got held up and also broken today. But when you look at what's going on, I mean, just look at this right here. This was the total market caps of Silicon Valley, First Republic, and Credit Suisse. So you had $100 billion disappear in 1 year and 4 months. Then last night I put this out to the members in the Discord and it happened. All of a sudden after hours, more banks start to absolutely plummet in after hours. Of course, that was after the Fed meeting, and you can see some of them between 20 and 52% in after hours. And this meme never gets old, right? I mean, you can just add these banks on the list. The Grim Reaper's knocking. And you can see this is today. This is what happened. PAC-W down 44%. WAL 37%. FHN, I don't know who that is, 34%. The rest of them all down double digits, right? And what's happening is even the White House put this out today, they want to look into short selling of these banks because like this, short interest as a percentage of shares outstanding in KRE, which tracks regional banks, rose to 96% from 74% a week ago. When accounting for the synthetic long bets created in short sale, it means almost 50% of positions in the ETF are wagering on a decline, which of course they're making out like bandits right now because that's exactly what happened. And it makes you think, what's happening here? Because we're talking about the stocks. There's been nothing about the banks actually as far as how they're performing, because even one of the banks threatened to sue a publication that put out news that they were actually in talks with their attorneys and everybody trying to figure out who they could sell to and all this stuff. And they said that's not true, whether that be the case or not. But the fact that they came out, they said they want to sue these people, kind of, at least that's a strong report, right, of what's happening, because it caused their stock to plummet, which of course caused their executives to lose a lot of money. Right? And they don't like that very much. But what I feel like is going to happen about a year from now when all this is said and done, whenever it is said and done, some investigative journalist is going to uncover that the top 5 banks, and this is not illegal, by the way, as far as I know, so I don't think I have to say anything else. But I mean, what it's going to uncover is their investing arms were actually in on this, on shorting these stocks to death, putting out all kinds of stuff out there, whether it be true or not, just saying, hey, I think they're in trouble, right? Trying to drive these companies in the ground so they can pick them up for pennies on the dollar. Just, of course, what JP Morgan just did to First Republic, and you saw that deal. I mean, that was the sweetest deal ever. And when the bank's in trouble and about to go under and the FDIC steps in, you get an even better deal, as you can see with all the debt they took on and just said, here you go, JP Morgan. And it never seems to fail, even though JP Morgan is not supposed to be able to purchase any of these banks because you're not supposed to be able to hold over 10% of deposits. And now, guess how much JP Morgan now holds in deposits for this country? 14% in one bank now. They had to get a waiver, and it was pretty easy, right? There was other banks that wanted to purchase that bank. And nope, didn't happen. Somehow you got it, right? And so, it's not going to surprise me a bit if we get a report like that. But you can see, people see chum in the water, and they're going for it, right? They're trying to drive these stocks to make them penny stocks, basically. And so if somebody had asked me, like, are these banks investable? I'm like, hey, I know people that bought First Republic, and of course now they lost all their money. I can't say all the money because I saw it on the OTC level now at 33 cents, I think. So technically you still have some money. But that's the problem. What you risk is FDIC stepping in and then some other bank coming in and just buying them up. That's the thing. You can't predict that. There's no way to predict that, right? And with all the stress in the banking system now, even they're saying deposits have stabilized, all this good stuff, you just don't know. You can't control the uncontrollable, right? And so, and especially when these bigger banks are seeing the deals that they're getting to take over these other banks and how much money is going to go to their bottom line, you got to kind of question that, right? Now, the bond market, and again, let me know what you think about all that stuff going on with the regional banks and stuff. But and then if you're gambling, are you piling into these stocks or not? So, when you look at the bond market, and this just stunned me today. So now they're pricing in a 15% chance that we're going to cut rates in June. That's right. Next month, there will be a rate cut. And even when you look at this one right here as a different source, they're actually pricing in 98% chance they're not going to do any rate hike. But then they're pricing in a 2% chance in June that they'll do a rate cut. right? Now, mind you, we just raised rates, right? And then when you look at the tracker here from our friend at Charlie Blale on Twitter, you can give him a follow. You can see right here what they're expecting. Cuts still. Even though he said we're not planning on cutting, it's not in the cards. Nope. That's what they plan on seeing. They plan on what? By next year being at about 4.38% or whatever it is. So they're expecting cuts this year still. And you can see right here from another source, we compare this all. They're all lining up really. This is the 10-year Treasury yield, the Fed's target rate, and then the core CPI. But more importantly, just pay attention to what's going on with the 10-year, right? The 10-year down here didn't really move. And of course, what it is the 2-year especially, look at that. That's what the market's going on when they predict it's going to be a pause. Because when there's a pause, the 2-year yield and even the 10-year yield, they drop precipitously, okay? And so, and it's kind of laugh because it's like, the market's like, hey, baby, can I get a rate cut or something, please? Give me a rate cut. And before we continue on, if you can just hit that like and subscribe button, I sure would appreciate it. It helps out the channel a lot. And if you like this kind of content, don't forget to hit that subscribe button. It's very important for you to get notifications when these videos come out. Appreciate it, guys. And the important thing, of course, to keep in mind is the only two reasons I can see it, and put in the comments what you think, as far as rate cuts is, one, you have a black swan event and they have to come in and really rescue the economy. And then two is if CPI just falls off a cliff, if core just implodes and goes down to 3% or whatever, and all of a sudden, and then, that could justify it in a way if they want to justify it. But remember, the market, when it says forward looking 3 to 6 months or however many months you want to put on it, it's forward looking to more liquidity, not anything else, not earnings being any better or anything like that. It's forward looking to, I can take out 100 million in debt for 4% versus 5.25 or 3% versus 4.5, that kind of stuff. The Treasury is going to come in and guess what? I think I may have mentioned this yesterday, but I think the Treasury and then they're actually working on a program now where they're actually going to start buying our own debt back next year. And so, and another effort to ease liquidity, right? There's a reason why they're doing that. Liquidity drives markets. So they actually did it in 2000. So I'm actually going to do some research on that to see how or what it did, what effect it had on the market. Because I didn't know we did it in 2000. Did you guys know that? I didn't know that. Sorry, I was in college and, wasn't paying much attention to that. But so yeah, they did it. And so I'm going to research and see what it did as far as how it affected the market and stuff. But yes, we will be buying our own debt back now. And that leads me to this right here. And I mean, boy, I tell you, the short sellers in full force. Now they're targeting emerging market stocks. We have reached a 13-month high in the short interest on some of the largest equity ETFs now. As you can see right here, this is Vanguard. And so they are shorting the heck out of it. And what have I talked to you guys about? We've already talked about them shorting currency, shorting the dollar, shorting the highest shorts we've had on the S&P 500 E-mini futures. And so, I mean, they're just loading up, man. This is what we talk about when I say the market is just, it's like too bearish to even go down, which you'll see in just a minute what I'm talking about when I say that. But, let's go into the charts. Okay, so S&P, we talked about this yesterday. I want to see a test of this trend line, see if I can get a third touch on that. Instead, I fell right through it. But no worries. I told you 404 was a good support line. It bounced right off of that, as you can see. And then, of course, above it, we got 407, 410, which bulls will want to actually fight like crazy to get above. But you can see 404 right there. Nice double bottom. I thought it was going to do a triple bottom when it started heading back down. It did not. So we'll see what happens tomorrow. And again, this will depend on Apple earnings and stuff. And then don't forget, we got weekly options expiration as well. As we can see, and we talked about this, and I'll show you on a few charts. Obviously, we had this divergence right here. The RSI is heading down, but of course, S&P was actually heading higher during the same time frame. So of course, this is kind of working its way out, right? The RSI was giving us a signal saying, hey, you need to go ahead and pay attention here. And so, of course, we're getting a little bit of a sell-off here. We'll see how far it goes down. Again, I think Apple is going to have a lot to do with that. And like I said, the bulls, if they can regain 410 especially, but if they get us to 416, we're definitely going to close that gap above. If we break 404, then watch out between like 392 and 395, okay? So just pay attention to that very closely. Then we got the Qs right here. And what we talk about, this rising wedge, we end up coming down, testing, just like I talked about, that trend line right there. Again, 3 gaps right below it, which is not what you want to leave behind at all. But again, it held support. And of course, this is another one. What we have RSI divergence going all the way back to March 31st. What was happening? The keys were going up, RSI was going down. And of course, now that's playing out for us. So that warning actually did hold true. And you can see with this one right here today, it kind of basically had like a double top, right? It came up, tested that 317, 60-ish area once, twice, failed on both of them. And this is what I'm talking about when I say bearishness, right? Is it too much bearishness? Probably so. You can see, obviously, the bulls didn't change a bit on this latest report that came out yesterday. But look at what happened. Went from 39% bearish to 45% bearish. And so you had a lot more people in neutral. They said, nope, now they're going bearish, right? And so, but when you're usually this kind of bearish, it's hard for markets to make a big move down unless there is some kind of crazy event that happens. And I understand you can see it tomorrow going. We got weekly option expiration, a lot more puts than calls, a lot of puts sitting at 405, 400 area. And you don't got any real major calls to like 415. So, we'll see if they have us in this trough. This is exactly what happened last week on Friday. They kept us in the trough down here in that range. We'll see what happens tomorrow. And so then you got Tesla. Tesla, of course, is easy. Just look at that 165 area. That's what I told members. When it breaks that, that's going to be a very bullish thing. But right now, it's just struggling right now to find all the buyers. It's getting held up. But, all those dip bars aren't coming running in and driving it up right now. And so that's what you got to watch out for. Again, as far as trading, I wouldn't go in for 165. Some people are probably going earlier than that. But that's my key level to look at just because it's tested this so many times. And I think the market, again, it's just in this kind of like wait and see mode right now and digesting what just happened with the Fed as well. Now, Shopify, this one's up like 28% today. Was looking to fill that gap right there. Instead, it blew right through it, looking to also fill that volume gap. And of course, what happened? They reported earnings and beat top bottom line. But more importantly, they're going to do a 20% cut in their workforce. This is after a 10% cut last summer. And of course, what else happened was, and we got to get the details on this, they're also selling parts of their company. So they're going to go ahead and sell the last mile delivery part of the company, get rid of that. And then they're also going to be selling their 6 River Systems, which is some kind of warehouse robot maker. And so just consolidating down again, we don't know if they sold it a loss, they sold it a gain or whatever. None of that was even put out there, but the stock just absolutely skyrocketed because what are they doing? They're cutting costs all over the place, right? And they're just going to focus on their core business. Now, of course, you look on the hourly, that's pretty overbought, right? So the MACD's looking pretty far up there. So we'll have to see. It's pretty famous for gapping up or gapping down and then filling the gap. So again, I think you know which way this is probably going to go depending on where the market wants to go. Now, Nvidia, again, it came right back down. We talked about into this consolidation phase right here. But if you look, what's interesting, you got the same thing, the RSI. The RSI we talked about for weeks now. Since March has been talking about, nope, trying to get a sell-off. This one's setting new highs. Again, it's not got the sell-off. It doesn't report for a couple of weeks. But, people think, oh, this is it. It's finally going to pull back because it needs a pullback. But, again, the bulls are just going to say, look at this right here. All it's doing is setting up for another move higher, right? You see a 1, see a 3. Actually, if you just go back, it's followed this pattern the whole time. And what do you see, right? It's just ready to start moving up to its next new high. That's what the bulls are going to say. And hey, at this point in time, how could you argue with them, right? I mean, this thing is just taking off like a bat out of hell. So it just continues to go and go and go and be the big engine that could, not the little engine. Now, AMD, holy cow, what happened there? Look at that candle. Oh, my goodness. All of a sudden, bad earnings. Don't worry about it. It must be something fundamental or something happening here. Well, actually, what happened was, you can see right there, it got above that year-to-date anchor VWAP. I told you I loved it. It came down, actually rejected off the channel, came down and consolidated along that year-to-date anchor VWAP the rest of the day. And of course, what happened was, holy cow, they said the magic words, AI. AMD jumps 9% on report Microsoft is collaborating on AI chip push. So that's all you need to bump up about 9% on something. Some news right there. Now, Apple just reported earnings. I'm recording this, and shocker, double beat top and bottom line. And wait for it, what I tell you yesterday, $90 billion share buyback program. There you go. All right, increases dividend from 0.23 to 0.24. There you go. I think Warren Buffett's going to be getting a $240 million dividend check. You believe that? So it's like, there you go. So I think it's up 2% right now. And again, they don't guide usually. You don't have to. If you don't like it, sell the stock. That's what they say to people. Because they know they make up 25% of ETFs and, what it is now. What is it, 13% of the Qs or some crazy mess. So they don't care. Do what you want to do. And nobody's going to sell it. So, there you go. So we'll see how it digests on the call. We'll see where we open up tomorrow. Obviously, it opens up anywhere from 2 to 5%. because it makes such a big weight of the market. Yeah, but I don't think anybody should be surprised, because I think hadn't all the large mega caps got the double beats so far. I mean, that's what I'm saying. This earnings, again, because you keep the bar low, it doesn't matter, right? You just keep beating it, right? And just be careful on your guidance. That's the key. So, or lay off a lot of employees. So anyway, lastly, that leads me to the economic news. As far as the economic news, you can see a whole bunch of payroll data, and nothing more important than that an unemployment rate will finally tick up. All right, we ticked down last time. We're expecting to tick up. And so put in the comments what you think about the unemployment rate. I'll go with 3.6. Now, put what you think in the bottom. You think it's going to be higher than that, or do you think it's going to drop to 3.4? Right, that would be not historical. It's been that low before, but it has to go way back for my time, and most likely your time, before we've been that low on unemployment. But again, it's amazing to see what the bond market is pricing in. And, what's the black swan event going to be? We won't know if we have one. If we do, who knows where it's coming from? Because right now you see the market's like, whatever. Because truth is, whether the banks fell or not, it's not really that big a deal, because if bigger banks are buying them up, right, you still have banks to loan. The big problem is with the pressure on the banks, again, is, I can't stress it enough, them just not loaning money out. But again, that's one of those problems that takes time to work its way through the system, okay? And so that's why the market is like, whatever, we'll just keep going as we're going. And I mean, you can see earnings again. I said many months ago, I said, what happens if the first quarter rolls around and there's not an earnings apocalypse? Well, right now, we have a higher beat rate now than we did for the fourth quarter earnings, right? And so it's kind of hard for the market to even make sense to move down if you're beating on earnings. A whole bunch of these companies are, especially even the smaller companies are beating now. And so again, just putting that out there, food for thought. But and then when you got so much bearishness right now in the market, it's hard to get that move down without a crazy event happening. So, just keep that in mind for now. That don't mean it's going to happen. Like, as these interest rates, if they hold them like they said they were going to hold them for the rest of the year, it will put a strain on the economy. There's no ifs, ands, or buts about that. And we don't know what's going to break. Something always breaks. Right now you're seeing the stress on regional banks. But again, they aren't the big banks. If it was the big banks, it'd be a whole different ballgame right now. But it's just these smaller regional banks. And when you compare, what is JP Morgan now? It's like, is it 3 trillion in assets or some crazy mess? 4 trillion, whatever it is. It's just monstrous, right? And so you look at these banks, so the one bank that's probably going to go under is like 30 billion in assets, maybe, I think it is. So when you compare that to the big boys, not much there, right? It's not a Bear Stearns moment or whatever it is, I guess. I don't know. But anyway, just putting that out there to you. Let me know what you think in the comments stuff. I always like to read the comments. So hit the like, subscribe button if you got anything out of it. And we'll see how tomorrow's shaping up. Don't forget, weekly expirations on the options, okay? So those are always fun days. Or maybe not. We'll see. I'll see you later, guys.